Welcome to the Enjoy More 30s Family Finance Podcast, the only podcast dedicated to making life more enjoyable for young families by hitting on the financial topics that tend to weigh on us, stress us out, and distract our focus from simply enjoying life.
Hello, and welcome back to the second episode now of our New Year series, Set Your Compass for the New Year. As always, if you like what you're hearing, please make sure to subscribe, follow us on Apple Podcasts, wherever you listen. Clicking that star, leaving the review, it really helps us reach quite literally the millions of other young families out there that are just like you. Now, last week we discussed goals. So as you get ready for this new year, how you should do this with your spouse, questions to ask yourself to really focus on what matters most, and how goal setting in general is to help you achieve more things more quickly than you otherwise would have, not to make you feel like a failure. Remember, no one out there hits 100% of their goals. That isn't the point. So if you haven't checked out that episode yet, definitely do that soon. Today's episode is titled Pay Yourself First, which is an easy, self-explanatory title in many ways, but really something that way too many people don't actually do. We set our compass in that first episode with the goals, but we also need that ship to actually sail us to where we want it to go. The thing is, ships aren't free. They cost a lot of money. And we likely need to save, pull funds together over time, to be able to really get the ship that we need to get to where we want to go. So the goal for today's episode then is for you to be inspired to see how much you're currently saving towards you, towards yourself, and if needed or possible, increase it so you can be on a faster pace to reach those goals. Every month you pay the grocery store, you pay the heating company, you pay the car dealership, you're taking your hard-earned money, and the first thing people think too many times is, what can I buy? Which translates into, who can I give my money away to? Give some to yourself every month. You are the most important person there is. Paying yourself first means putting money aside for you and for your goals. If you're trying to buy a new car next year, that may be the bank. If that means a second home in 5 to 7 years down the road, that might mean a general investment account. If it's retirement, that could be your 401k at work, a Roth IRA. So you get the idea. Where you put it kind of depends on what it is and when you need it. But when you put it into any of these accounts, you are at least putting it towards you. So how much should you pay yourself every month? How much am I worth? I'd say the minimum is 5% of your gross income. So if you earn $100,000 a year, then at least $5,000 a year at a bare minimum. That's like if you don't really like yourself that much almost. But 10 to 15% really is much more ideal because, hey, you're really important. You deserve more. We have clients that go, as high as 20%, but it needs to be something. You have to pay yourself something. You are worth something. I'm not saying you need to just save as much as possible and, eat cat food for dinner and take no vacations. That's not the point of any of it, but you need to treat yourself fairly. You need to save something material towards you. Now, an exercise we've discussed before to help you see where you are and what you could potentially save is the 36% ratio, what we call backdoor budgeting with our clients. So what this says is that 36% of your gross monthly income, so before taxes, can be used for items specifically to you. So not taxes, not groceries, not cell phones, TVs, things like that everyone has. I'm talking about things such as a mortgage or rent, car loans or leases, student loans, anything you're currently saving towards yourself, maybe in a 401k or a savings account in the bank, something like that. These are things that some people have and some people don't. So if you make $120,000 a year just to keep it easy, then that's $10,000 a month. Using that 36% ratio we just spoke about, you get down to $3,600 a month for those specific items. So $10,000 a month gross before tax times 36% is $3,600 a month that you have to do something, with the specific to you items. So let's say that right now you're saving nothing. You're paying yourself nothing. You give all your money away to other people, but you have a mortgage of $2,000 a month and a car loan of $600 a month, let's say. So that's $2,600 a month on the specific to you items list. Now, the difference between the $3,600 that we calculated and the $2,600 a month comes out to $1,000 a month. That's what's left between those two numbers. So this is what you should have additional available to save towards you. It's the starting point. Might be a little bit higher in your life, might be a little bit lower, but on average, that is what you should be able to save every month, and likely what, your bank accounts may be growing at. For people that just kind of ignore this and they're not really looking at it, and their bank accounts go up over time, when we meet with them as a client and we go through this 36% ratio, we say, is it possible, in this case, is it possible, Mr. and Mrs. Client, that your accounts at the bank have been growing over time by roughly $1,000 a month? And they stop and they think about it. They say, yeah, I think that sounds about right. I think we could probably save that because our bank accounts go up by, about $1,000 a month. This is a great starting point to start saving money towards you, paying yourself first. So in this example, it just happened to come out to roughly $1,000 a month, $12,000 a year, which is 10%. That's a substantial, or at least a material amount to pay for yourself, pay towards you first, because you're important. So thanks for tuning in today, and join us next week for the episode called Use Lots of Buckets, ! Where now that you know how much you're paying yourself or how much you can pay yourself, how separating this into buckets where you're saving for these various goals can make them much easier to see and therefore much easier to achieve. Overall, though, if you're able to implement what we covered today, then that's fantastic. You have less to worry about than before. Focus more on enjoying life, kind of the whole point. So if you are wanting help, though, with these things, or you have questions you need help in answering, just check out the Ask Joe section on the show's website, www.enjoymore30s.com. That's enjoymore30s.com. Until next week, thanks for joining me today, and I look forward to connecting with you again soon.
The conversations on this show are Joe's opinions and provided for general information purposes only. They do not constitute accounting, legal, tax, or other professional advice for your specific situation. You should always seek appropriate advice from a financial advisor, accountant, lawyer, or other professional before acting upon any content or information found here first. Joe is affiliated with New Horizons Wealth Management, LLC, a branch office of TFS Securities, Inc., and TFS Advisory Services, an SEC-registered investment advisor, member FINRA/SIPC.